Hello, welcome to AleaSoft webinar. I hope you all enjoyed the holidays. My name is Alejandro Delgado, Technical Director of AleaSoft and Associate Partner at Alea Green. And thank you for joining us today in our first webinar of this year with the topic Prospect for the Energy Markets in Europe from 2022. The first speaker today will be Oriol Saltó, Data Analysis and Modeling Director of AleaSoft and also Associate Partner at Alea Green, that will analyze the evolution of the European energy markets. Then we have two speakers from PricewaterhouseCoopers Spain that have joined us again after 1 year from our last webinar together, and that will talk about the vision of the PPA market for the consumer in the current context. They are Alberto Martín, Energy Sector Consulting Principal, and Roxana Fernández, Energy Sector Consulting Senior Associate. If you have any questions at any time during the webinar, please use the Q&A menu and we will answer them after the presentations. And now, I hope you enjoy the webinar. Oriol, please, you can share your slides.
Good morning, Alejandro. Thank you. Good morning, everybody. What an exciting time that we are living right now in the energy markets. Everything has changed since 2018, 2019. Obviously, everything has changed since 2020, but even everything has changed since 3 months ago. We made our last webinar last year in November, beginning middle of November, and we will see how things have changed since then. That it's quite a lot, and there are also very exciting times that we are facing right now with uncertainty, with high and lower prices again. So, but just let's go ahead. I'll try to be in time. So to start, I will just a couple of slides about AleaSoft, our company, and the services that we are providing, in case you don't know us. In AleaSoft, we provide forecasting services for the energy sector, covering all the most important energy markets in Europe. We have reports and forecasting services that go from the short term, so hours ahead or day ahead markets, up to long-term reports that can go up to 3 decades ahead. Obviously, we make forecasting for demand and price of the energy markets, but also any variable that can have an impact into these markets and their prices. Renewable energy production, and weather conditions, socioeconomic indexes, CO2 prices, oil, gas prices, everything that has an impact on energy markets and their prices. And not only forecasts for the day-ahead markets, the spot markets, but also ancillary services like intraday markets or constrained markets, technical restrictions, etc. Everything that and anything related to energy markets and their demand and prices. We use our own methodology. It's a methodology developed specifically for forecasting in the energy sector. The 3 main points that we always like to stress about this methodology is that it is a completely scientifically based methodology. This makes reliable forecasts that keep consistency over time. And what else we can say that we have been using this methodology for more than 22 years, started in the Iberian electricity market, and now covering all the energy markets in Europe. We will start seeing how fuels and CO2 prices have been during this last month. I always like to start with this historical perspective on the Brent oil prices. Oil prices are kind of the global index about how the global economy, how most of the global energy markets are going. And we can see how in the history we have had a wide range of prices. Right now we are having relatively high prices, not the highest prices that we ever had, but we are in this midterm since the lowest point, the lowest prices during the worst part of the crisis in 2020. Since then we have had this midterm upwards trend. And right now we are at the level of a longer trend. If we look, if we go back to the highest prices that we had in 2008, just before the global crisis started. Since then, we have had a long-term downward trend in the prices, and right now, in the last quarter of last year, we reached this resistance at the long term, and right now we are kind of approaching again this ceiling, this virtual ceiling at the of the long-term downward trend on energy prices. And if we look closer at the recent evolution of the prices, we can see how since, as I said, since 2020 we are in a clear upward trend, going up and down, but the general trend is upwards. And since December, last couple of months, we are in a clear upward trend. And I made this graph yesterday, so it's missing 1 point, the market yesterday. And yesterday it touched $85 per barrel. That is this long-term resistance. And after touching this morning, let me see, this morning it's going down this morning, and it's around 0.1% down right now. Okay, so interesting to see how they will evolve right now that we have reached this long-term trend, somehow meeting also this upward trend in the midterm. So in the past, all the midterm upward trend that they had, it's always the long-term downward trend that have won. Let's say, let's see what happens this time. Something more, let's say, more dramatic has happened with the gas prices. Gas prices is one of the main drivers of the electricity market prices, and we know that we had the lowest prices during the worst part of the crisis during 2020, and since then we have had an incredible upward trend, exponential increases since mid 2021, and just in November, when we did the last webinar, we have had in October the 7th, more or less, we have had this historical highest prices. But since then, these historical prices, these historical maximums has somehow got very, very outdated. And right now we have just before Christmas, 23rd of December, we reached a new maximum, and then just after that we hit a local minimum in these prices, around 65 euros megawatt hour. Since then, prices went up a little bit. Obvious. High volatility, it's one of the main aspects that we are having right now. So constant ups and down, beating new prices constantly. So two main factors describe gas prices and energy prices in general right now. One is high level of prices, and then volatility. A lot of volatility that, as we will see, it somehow gets mirrored, gets replicated in electricity market prices. CO2 prices also from the lowers during 2020, and a clear upward trend, maybe not so exponential, let's say, as gas prices, but again reaching new maximums, historical maximums, basically week after week. Right now we are at this level between 80 and 90, around 80 euros per ton of CO2, and right now we have been a couple of months fluctuating around this price. So again, high volatility and high prices. Moving now to electricity prices. Electricity prices and electricity markets. As I said, we are covering most of the electricity markets in Spain, sorry, in Europe. I won't have time to go over every market, but I'll mention that we have an online platform that we are offering to our clients, where you can follow. Let me see if I can. Okay, I can show you it live. This is how our online platform for data analysis and data collection and data reviewing is appears. You have all the markets or most of the markets. We are adding new data and new markets constantly. You have basically all the electricity markets, or the most important electricity markets in Europe. And for every market, you have a bunch of interesting variables: price, demand, wind production, solar production, hydro production, etc. Interchanges. Depending on the market, you have more or less variables. And then you can see, for instance, this is price for Spain, and you can see how, as I mentioned, we will see how correlated with gas prices. We had an historical high prices during just before Christmas Eve. So December 23rd, we had our maximum historical price, and after that we so it was close to over 400 euros per megawatt hour, and just a few days after we reached prices close to zero, so just of 2 euros megawatt hour. So again, as I said, very high prices in general, very high level prices, and also a very high volatility. You can explore all the data as you want. You can go back to, for instance, January and see how since then, at that time, at the beginning of 2021, we had higher prices at that time during the Filomena storm, and we thought that prices were kind of exceptional. Since then, everything is outdated, and right now we are, as I said, at the level of 400 euros megawatt hour. You can also show daily average prices. Again, very high prices right now. We are at the level around between 100 and 200 euros per megawatt each day. That's prices that just few months ago we thought that they were kind of impossible, these prices. Okay. Let's see, we can also look at the fuels prices. So you have gas, oil, CO2, coal, everything. And this case is the TTF price. For instance, we can take a look and see how since the beginning of 2022, as we have seen, this very high volatility, that it is increasing. So it's getting even worse. And then these are all the observatories that we are providing, but you will also have the option to configure your own data in order to make them to make all kinds of analysis. For instance, I have an observatory, that's how we call them, using the prices that I used to check daily, so I can plot them all together, so it's easy for me to analyze how all the markets that I am interested in are evolving day by day. And as we are here, we can check and see how prices have evolved this last year, 2021. For instance, we can go back a little bit, 2008, and see how this is the yearly price since 2008, and we can see how this 2021 is an historical high price. We can see how the Italian market has been above the rest of the markets, and usually the Belgium, France, Germany are usually the lowest ones. But okay, let's go ahead, because if not, I am running out of time. Let's go back to my slides. Here they are. As I said, I won't have time to go over all the markets and all the aspects, but in our website, you can find all the reports that we are offering. We are analyzing any aspect that can have an impact in the energy markets, long-term analysis, batteries, storage, optimization of storage systems, financing, PPAs, renewable energy actions, and any aspect of the the electricity markets, energy markets in general, that we can modelize and analyze. This is the electricity demand, monthly electricity demand since 2020 for some of the European energy markets, electricity markets. Obviously, the level of demand in every country is very different, so I scaled them. So the demand during 2020, it's scaled at 100, so you can compare it easily. And here we can see interesting things, how in March 2020, all the markets suffered a sudden drop in electricity due to the restrictions during the lockdowns and restriction on economic activity. And since then, more or less, all the countries have recovered the previous levels of electricity demand. Here we can see how some of the central markets, central countries in Europe, like France and UK, also Belgium, are very sensitive to the winter temperatures, and basically they have the lowest demand points are during the summer, and more countries more to the southern part of the continent, like Spain and Italy, they have peaks during the winter, so warmer conditions, so more energy demand during the summer also. If we look at the electricity market prices, as we have just already seen, October, during our last webinar, we have just ended October. That was the most expensive month that we have had since then. But since then, obviously, December beat that record by far, let's say. And right now we are at the highest levels that we have ever had in the electricity markets, and all the electricity markets. In the average of 2021 for all the countries except Germany, all the average annual prices were above 100 euros per megawatt hour. Germany got just to 96 something, so very close. But all the markets with historically high prices last year, and this year they started more or less at the same level that they ended up in February. Looking at the recent days, as you can see, very very similar behavior in all the electricity markets. As I said, more or less all the markets had their maximum around between the 21st and the 23rd of December, where we had the maximum of TTF gas prices also. And after that, most of the all the prices in all the markets dropped by, you can at least divide by 2 or by 3 in some of the markets, the prices in just 1, 2, 3 days. So that's what we call macro volatility. That's not even volatility, that's macro volatility. And since then, as I said, level prices between 150 and 200 euros megawatt hour. So now let's have a look a little bit into the future, not into the future, but how the futures market, futures market prices are evolving. So we will be looking at the forward curve of the most important markets to see how the market, how the agents in the market are seeing the future, or how much they are paying today for the energy into the future. This is the forward curve for the Brent oil, and we are comparing it with the forward curve that we had in the last webinar that was at the beginning of November. So as we can see, since Brent oil prices have been fluctuating, as I mentioned, but more or less right now they are at more or less the same levels that they were in November. So forward curves basically with no changes. Long-term prices right now around $65 per barrel. On the other hand, gas prices have been rising and rising since November. So the forward curve it's also has been increasing. And here is where we are having some of the most interesting changes, because for the first month, you can even say that prices in the forward curve haven't changed much. But looking at the prices for 2022, we have seen we are seeing a huge increase in the last 2 months. So again, we are expecting prices to be very high during winter mainly. We expect a drop in the spring at the beginning of the second quarter, but we were expecting a very high decrease in prices. Right now, what the agents are seeing, the prices that they are paying right now for the energy in the future, they are seeing not so well, a much less decrease in the prices. So obviously this is impacting the forecast in the electricity prices. So we are still expecting decreases in the prices when the spring arrives, but it's difficult right now to forecast how much the prices will go down and how fast, because in 2023 we are also seeing that the prices are going higher than they were before. So macro volatility is introducing this uncertainty. So we can be sure, or more or less sure, that the prices will go on average will be a little lower during starting the second quarter of this year, but it's difficult to see how much they will fall. And you can see how just in a couple of months we are moving 15-20 euros megawatt hour on gas prices. This means twice as much in electricity markets. So very difficult and interesting times for forecasting energy prices. CO2 prices. Well, we know that the forward curve of the CO2 prices is basically following the spot prices. So spot prices are right now higher, so we have a higher forward curve. But it's interesting to see how the curve is not just moving. We are seeing that it's getting steeper. So we are seeing here a change in 20 euros per ton, more or less. But at the long term, we are seeing changes that can go up close to 25 euros per ton. So we are seeing, as we are getting higher prices, the curve is getting steeper and steeper. We know that CO2 prices it's a market designed for the prices to go up. So the interesting thing here is to understand and to and to forecast how fast these prices will keep increasing. And forward curves for the power markets, so electricity futures markets, how the agents are seeing right now. Again, compared to what we had at the beginning of November, higher prices in most of the markets. Right now, most of the markets are moving above 80 euros per megawatt hour. That these are annual prices. So we are talking about the whole year average being above 80 euros per megawatt hour. For 2023, above 120. These prices are quite incredible to believe. And again, as always, the Spanish forward curve is much lower than the rest. This is what as we always say, this there's no liquidity in the futures market beyond 2023, 2024 maybe. So basically these long-term forward curves are synthetic prices based on nomination of bilateral contracts. So it's prices that are already including a discount on the spot market. So it's not a very good it's not a very good outlook of how the the spot prices will be in the future. But well, the general rule is telling us that prices in Spain will be much lower or lower than in the rest of the countries. I think this is the idea that we can get from this futures market. And just, I think I'm right on time. Just trying to look a little bit into the future. What are also kind of a summary of what we have been seeing. So what's important in order to forecast the power prices? So as I said, gas prices and CO2 prices are the are the two main drivers right now. Also renewable energy production, when it reaches certain levels. In Spain, we have seen how at given days, during given hours, we have seen, as we have seen in our platform, prices can drop very fast, but in a couple of hours, they can go up again. So in general terms, the average prices are driven by gas prices and CO2 prices. We have seen how these prices are at very, very high levels, and also they are right now very volatile. And this is what is guiding the forecasting of power prices. So what is describing the midterm? High prices and macro volatility. That's the summary. At the long term, on the other hand, what we are seeing, what our models are showing, is that obviously this impact that we are having due to the high prices that we're having right now, it propagates somehow into the horizon. But at the long term, we are seeing that the equilibrium prices are more or less at the same levels that they were before this crisis, before the 2020 crisis. So it's important to know this, because when you are thinking in investing in a renewable energy project, when you are thinking on a PPA, it's important to think at the long term. So always it can be a good. We will be talking about PPAs right now with PricewaterhouseCoopers right now, but is it a good moment or not for a PPA? Is it a good moment or not for an investment? It's important. Abstract yourself from the current situation that, as I said, instability, macro volatility, and think at the long term. What we are seeing at the long term is that things are more or less as they were. So if a project, if an investment was profitable in the past, last year, a couple of years ago, it's still profitable right now. And just let me finish inviting you to our next webinar. It will be on February the 10th. We will be talking about this macro volatility environment that we are right now, because we think it's important to analyze it in some kind of depth, and trying to see how a PPA from the consumer side, as we will be talking today, analyzing how this macro volatility scenario can impact producers and consumers. And if you have the opportunity, if you have the chance to also connect to our webinar in Spanish that we usually have just afterwards this English version of the webinar, we will have Fernando Soto, that is the director of the Association of Large Consumers in Spain. He will give us an insight of how the consumers are seeing the PPAs and the situation right now. So that's it. Thank you, Alejandro.
Thank you very much, Oriol. Great presentation. And Alberto, when you're ready, please, you can share your slides now.
Okay, thank you very much, Alejandro, and thank you very much, Oriol. It's a very interesting view on the electricity market, and for sure, thank you for all attendees to this webinar. This is Alberto Martin. Here with me is Roxana Fernandez, that is going to talk about the PPA market and the view of the PPA that we have in PwC. Reyes Gomez, she is our lawyer, regarding regulatory issues about PPA and about the energy sector, is not joining today, but for sure you can have the contact of Reyes in order to talk about these topics. So we want to share with you three issues or three topics today. The first one is the changes in the market, both commodity and regulatory point of view. On second place, we want to talk about the PPA market and how the consumers need to analyze a deal regarding the PPA. And the third and the last topic is the same analysis, but focus on the self-consumption PPA. Okay. So what happened last year? Well, as Oriol was commenting, the commodities, the change in the commodities environment has a huge impact in the market. And for sure, the electricity cost is higher because of that. On the other hand, we have the renewable auctions that, for sure, the ministry and the market thinks that are going to impact positively in the pool price regarding the consumer point of view. The third one is the regulation of or the unexpected regulation because of the change in the commodity market. Okay, the Royal Decree Law 17 and 23 of 2021 that impact a lot on the PPA market, and they cause a lot of uncertainty. Okay. And the other two regulatory changes that are in the table are the national the National Fund of Sustainability of the electricity system that are going to change the regulated structure of the electricity bill. And the last one is the change that the ministry proposed, and they are already implemented, the structure in the change in the structure of toll and charges, right? The way that the consumers finance the regulated cost of the system. So moving to the commodities, just an outlook of what Oriol was saying, that the commodities multiplied by 2, by 6, and by 3 regarding the Brent, the TTF, and the CO2 price. So this is not volatility. This is macro volatility, like Oriol says. And for sure, the change in the commodities impact on the pool price. The pool price go multiplied by 6 regarding the price of December 20. The last year, okay, the December 2020, and this is due to the drivers of the pool price, right? There are two main drivers. One is the thermal gap, and the other one is the commodity price. The thermal gap is the quantity of the volume of thermal generation. Nowadays, is just gas, natural gas or combined cycle, okay. And the other hand is the commodity price. So the higher the thermal gap, the higher the pool price, and the higher the commodity price, the higher the pool price as well. So the thermal gap in last year, well, is more similar or even lower than in 2020, because of the installation of new renewable capacity, but the commodity price multiplied by 5, by 4, by 6. So the pool price are reflecting this increase, right? Moving to the auctions, to the renewable auctions, I'm talking about the first wave of the last government of auctions. They award more or less 8 or 9 gigawatts of capacity. But award capacity doesn't mean install capacity, right? Because in the last month we know that not all the capacity was installed. Quantities of the player was executed, and more or less 1 gigawatt of power and 1 gigawatt of power was even not built. And more or less 2 gigawatts of capacity was built, but not before or after, sorry, the deadline. So the key message of that is that the auctions is a good instrument, but renewable auction capacity doesn't mean install capacity in the future. So regarding the new auctions of the new government, they They auctioned more or less 6 gigawatts in two sessions, right? The main capacity, the main technology was the wind and solar PV, and the prices were about 25 euros per megawatt hour in the first auction, and more or less 30 euros in the second one. We are going to talk a little bit about that effect in the following section. The reasons behind that increase. A question that everybody asks us, that why the price of the actions are very different from the OMIP, even from the PPAs. It's because the product is not the same, right? We can have a forward curve based on bilateral contract, like Oriol says, but there are a lot of effects that that impacts in the price and impact on the profitability of the developer and in the risk that the developer want to take. So we can talk about all effects, but I want to highlight the solar capture effect. I mean that it's not the same. The average price of the pool is not the same that the solar PV is going to earn, is going to capture in the year, because of the high penetration of the solar PV. In the future, what we see, and with all players in the market see, that the solar PV price is going to be lower in the future, right? So the players need to transform the generation of the PV into a baseload profile of PPA, and this implies needs a cost that could be between 5, 6, 7, or maybe 10 euros per megawatt, depending on the view of each player of the future market. And the other key topic is the risk or the rentability of the counterparty. I mean, it's not the same not to have a PPA. Let me say a PPA with the government. This is the auction. That have a PPA with a counterparty, with a customer that could be a very high, with very high credit capacity, but it's not the same that the government, that the Spanish want. And the last one key topic regarding the change in the price, and for sure the change of the profitability of the developer, is the hypothesis on the CAPEX, hypothesis on the resource, right? The wind and the sun and the location of the project, and the hypothesis of the what we call the price tail, okay, the price between the 10, the year 10, the year 12, and the remaining operating life until the year 20 or the year 25. That is the last of the useful life of the asset. So these all combined effects could affect up to 20 euros per megawatt. The difference between what we see in the future market and that we see in the auction, and what we see in the PPA OTC market. Okay. So moving to another auction that is in play is regarding the grid capacity, the grid access capacity. The government began to auction and to give more free capacity in the grid, regarding the new hypothesis and the new criteria of our TSO. And the first auction is in place. It's not the order that said the auction is known by everybody. And the first node is what we call the Mudéjar node. That is the first coal plant that is not that was decommissioned by Endesa, no, in Teruel, and this capacity need to be auctioned because between all agents in the market. This auction not only have an economic side, but also an macroeconomic and impact on the economic of the area, and the impact on the employees, and the impact on the GDP of the area. So the government is going to balance not only the price, not only the project, but also the impact of the project in the local area, no, regarding the new criteria of the government. But a new capacity in the grid doesn't means new capacity installed. If we see how much capacity do we need to install in the future years in order to comply with our PNIEC objective, we need to install more like 6 gigawatts every year. And since the PNIEC was proposed in 2019, we accomplished, we achieved the objective, but in the 2020 and in 2021 we are very, very far of the objective, 20% far and more than 30% far of the objective. So I think that everybody has in mind that we are going to comply with the objective of the PNIEC, with our law of renewable energy, but the reality in this first year of the plan is that we are very far to comply this objective. So regarding the regulation, well, we went just to show that the regulation is very complex. Every year come in force a lot of new royal decree laws, order, and the others in the past for sure are not derogated. So the electricity sector, as you know, is very regulated. The main projects and regulation that are proposed by the government is, the first one is what we call the CO2 dividends, that the government thinks that nuclear and hydro installations are earning the increasement of the impact of the CO2 in the pool price, and they have not to earn this effect because the CO2 regulations come in force in 2005, and the nuclear and hydro installations were built in the last century, right? So they are thinking of a new parafiscal charge to that technologies of about 8 euros per megawatt, or maybe 10, depending on the CO2 price in the future. But this will be a new tax for that technology that maybe could affect to the profitability, to the cash flows, and maybe the nuclear has to reconsider the future business plans. And the other one is the famous Royal Decree Law 17 and the Royal Decree 23. The Royal Decree 17 is put in place the same concept, but regarding the natural gas price, the increasement of the natural gas price in the last month, all the price above 20 euros per megawatt should be returned to the system. But for sure they cause a lot of noise in the market, a lot of noise in all plants that have PPAs, that have hedges, that are bilateral contracts. So the government, after some negotiations with the sector, they published the Royal Decree 23 that all technologies and all plants that have a hedge of any type no, could not will not impact this kind of effect of this new tax. Okay. The other regulatory change that will impact on the final consumer is the national fund, no, of sustainability of the electricity system. That no, it means that all that we pay in the system regarding the regulatory incentive to the recorded technologies, to the renewable technology in the past, that we pay in our bills more or less 6 billion on the electricity system. The government says, okay, it should be paid not only by the electricity sector, but also the natural gas and the oil sector. So all sectors will pay more or less 6 euros per megawatt hour, no more on their bills. No, but the electrical consumer, no, the electricity consumers will pay less in their bills. In fact, we have more or some simulations regarding this effect, no, to the large consumer. No, the impact of this measure is more or less 7 euros per megawatt hour to the 6.1 tariff, more or less 3 to the 6.1, 2.5, and more or less 1 euro per megawatt to the 6.4 tariff. But these kind of consumers that are considered electro-intensive, like Oriol was talking about before, they will be more or less compensated of this new charge. So they are not going to pay 6 or 5 euros per megawatt. They are going to pay more or less 1 euro per megawatt hour. So it could be a neutral impact in the the larger consumers, and will be savings to the consumers with lower tariffs. Okay. So I will let Roxana to continue with the PPA analysis regarding the changes of the market.
Okay, thank you, Alberto. Well, once we have analyzed the changes in the regulation impacting the electricity market, we are now going to check which is the impact on the PPA market and prices. Okay, so first, well, really, the methodology in order to analyze and contract a PPA and get the one that is more suitable for each client and company is the same as it was before. Okay, so what we need to analyze is these 5 factors that are what will have influence on the final result of the PPA. First of all, the operational impact. This is which is the type of PPA that best suits the needs of the client. Maybe the duration, the profile, we will see it in more detail. Then the business case, this is the savings that will be obtained or are expected to be obtained due to the PPA compared to the pool prices. Also, the corporate social responsibility, this is the needs that the company has to be green, if GDOs are needed, or any other communication action that wants to be made. Also, the accounting impacts, depending on how the PPA is structured. And then the final phase of the specification of everything in the contract and signing the final PPA. Okay, so first of all, as I have just said, the operational part is what has, this is the structuring phase of the PPA. So here what we need to take into account is the different PPA alternatives in the market, and which is the consumption of the company that wants to sign the PPA. So for instance, we need to take into account if the company has a base load or more solar profile in order to check which is also the volume of the PPA that best suits the needs. And this is because, well, as you see here in the illustrative, solar profiles have only energy through the day, and depending on the needs of each company, maybe a baseload profile that also guarantees energy at a fixed price during the night may suit best each company. Also, it is important to take into account here the duration of the contract. If it's 7, 10, or even 15 years, that will also have an impact in price, or more duration, also a lower price. And also the different terms that should be specified, since the liquidation, if it's made daily, monthly, depending on its the operating needs of the company. Then the second really important factor is the business case of the PPA. Here, what each company needs to do is to analyze the expected savings of the PPA, comparing the PPA price and the expected forward course of electricity pool, in order to get an expected NPV of the project, and also to compare the different alternatives of PPAs in the market and see which one best covers the needs of the company. What we usually do, for instance, is having different scenarios in order to check also which are the real expected savings, even if electricity prices go up or down. So we have the resilience of the PPA. Then the third issue, corporate social responsibility. As we have said before, this is also a really important issue for companies, taking into account the green movement that we are living nowadays. So the PPA helps guaranteeing GDOs for the PPA volume, but also it can be established that the guarantees of origin are provided for all the consumption. And then also really around the PPA, we can have communication strategies in order to be able to communicate this green effect to the social media, or even including logos in the solar parks, and being able to communicate that the company is making an effort in order to be greener and greener. This is an important issue also. Then, getting in more detail, we have the financial and tax implications. Here, what we should analyze is the impact in the financial statements of the PPA, that they depend on the configuration of the PPA that we are making. For instance, we need to check the contract profile, if we are getting a PPA with a specific asset or not, if we are contracting with a parent company or with an SPV. Also, which is the duration, or which are the guarantees that are needed in order to sign the PPA by the supplier or producer that is providing us the PPA. So all these issues are needed to take into account. We need to do a decision tree, and also take in mind the different impacts that may happen. Okay. Here also, each company needs to take into account the financial needs, and which will be the impact in the financial statements, and if they are okay with that, or need to change anything in the PPA structure in order to get to a different result. Okay, and then the final factor, the fifth one, is once we have a structure, the PPA, which is the type, the impact, we know that we are going to have expected savings. We need to incorporate all those decisions into a contract with the counterparty, where we should include and specify correctly all that issues that we have analyzed until here, and also some legal parts that need to be also clear, like what happens if there is a change in law, which are the responsibilities of each part, which is the penalty if there is a non-compliance for any of the parts, or special issues that a company may have that wants to include in order to have a different thing about volumes or the term, everything specified, including also the guarantees of origin, also their price. So that is the analysis that always needs to be made for a PPA. Well, some of the most important issues taken into account, and that is what has not changed. But what has Alberto just explained regarding all the new modifications, and especially the increase in prices of the commodities in general during this year, has impacted on the PPA price. Okay, so the analysis for a PPA and contracting a PPA, the analysis is the same. But what we have seen is that during this year, we have seen an increase in PPA prices due to several of these due to this market situation. Okay, so for instance, we have seen in the market that some of the projects are being delayed. More of them for problems of execution, just longer timelines, and this makes we have seen lower availability of PPAs for the first years. So lower availability of PPAs means an increase in PPA prices due to lower disponibility. Then also, as we said, we have seen the cost of the gas prices and CO2 prices, but there has been also a rise in the raw material costs, and also on the freight or the transport of all these components. So the increase in the raw materials needed to build these solar farms, wind farms, and also the increase in the cost of getting these components to Spain has increased really a lot. So also PPA prices have increased. And also regarding, similar with this, the conversion from solar photovoltaic PV to baseload PPAs has increased in the recent years, mainly because, well, solar producers maybe need to compensate this difference in volume during the night going to the market, and since market prices, pool prices have increased, this conversion cost is also going up. So baseload PPAs are have a higher price than solar than they usually had last year. And finally, well, as we said before, all the commodity prices increasing and the decrease trying to stop these impacts have caused a lot of uncertainty in the market, and also an uncertainty on the price evolution. So this has also made some producers put the prices up in order to mitigate this kind of uncertainty. So finally, what we have seen is that more or less there have been like €5 megawatt hour that have increased the price of a PPA from last year to this year. That is more or less what we have seen in the auctions. No, this €5 on the increase in the PPA price. And finally, well, here we have included the methodology that we use in PwC in order to execute these contracts. Okay, with a first phase when we gather all the information of the companies, then a second phase where we analyze which are the best PPAs available in the market compared with the consumption and the needs of each company, and then a second phase where we formally launch the process in order to get different proposals and offers of the PPA that best suits each company, and hopefully finding the best option and signing a contract. So in case you are interested, we can talk more about this. So this is all regarding the impact of the PPAs. And now Alberto will talk about self-consumption projects.
Thank you, Roxana. We are running out of time, so just a couple of ideas regarding the self-consumption. The analysis is the same that before, that the offsite PPA, but we have some modifications regarding the what we call the operation and what we call the business case. The first one is different because you have an asset on your own facilities, and you need to design the asset, you need to optimize the asset, and on the other hand, you need to balance the generation of the asset, the generation and the self-consumption and the net load curve that you have, and you need to manage and you need to hedge. Okay, and for sure, as far as you have an asset on your facility, there will be more accounting implications that you need to analyze. There is a lot of high risk that the asset will appear in your books, in your balance sheet. Okay, and for sure you need to analyze the kind of the type of the contract that you are going to sign with your counterparty, since you have an asset in your facilities. And the other key topic is the business case. That for sure an on-site PPA is not only a safe not only means savings in the pool price, but also in the regulated term of the electricity bill, and it is composed by more or less 3 or 4 main topics. The transport and distribution cost, that in the future are going to be the same or even higher. The incentive to the renewable technology of the past that are going to be lower in the future. The non-mainland extra cost that for sure in the future will be lower, and the deficit, the tariff deficit that we are paying every year in our electricity bill, that are going to disappear. So our model and our view shows that all these concept will disappear between 2027, 23, and 2020 and 2013. So this is one key variable that you need to consider in your business case, right? Because you are going to sign a contract of 15 or even 20 years, and the savings are not going to be the same in the short term that in the long term. And also the effect that, as Roxana was talking, the effect of the solar PV capture price. So in the future, the solar PV hours of the pool price are not going to be the same that in these days. So I think this is all from our side. I don't know, Uriol, Alejandro, you want to sum up or to finish the webinar?
Yes, thank you very much, Alberto and Roxana, for that great presentation. Thank you again for sharing this webinar with us. But well, unfortunately, we have run out of time, and we have answered some of the questions already directly, but we will answer the remaining questions by email. Well, thank you again, Uriol, Alberto, and Roxana, for your presentations, and the audience for joining. Have a nice day.
Thank you very much.
Thank you very much.